Everybody, I am live on the internet and live in the virtual trading floor, and it's 10 after 4 on the last day of a crazy February, crazy start to 2022. I'm associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. This morning I was kicking myself when we gapped down for not keeping that QQQ short that I had on Friday. By the close, I'm not too upset about it. And I got a couple new longs in here too. Cool beans. All right, let's hop right into it. So, choppy day, really for the most part, but we closed well. And I'm not surprised that it was choppy. A little bit surprised that we closed well, to be honest, given what the price action was looking like intraday at certain points today. In the morning meeting today, what I was calling for, even though I thought it might be difficult because of all the headlines, everything that's happening, what I was calling for was the potential of an inside day today. And we didn't quite get that. Looks like our high today for the SPYs, which were relatively weak to the other indices, just ticked above yesterday's high. Qs in the IWM, it's a little bit more pronounced. But even though it wasn't technically an inside day, I think you could call it a rest day. Interesting that the volume's actually bigger today than it was on Friday, because it certainly felt like more of a rest type day, because we spent most of the day for the SPY within yesterday's range. But for a little bit, we kind of ticked above it. And that's kind of what I was calling for today, to get a little bit more clarity from the market. And the reason why is kind of like I laid out in the morning meeting today. We have a bit of a battle going on here between bulls and bears, where we know, certainly kind of more medium picture for the year 2022 for sure, bears are really been in control, right? We got lower highs and lower lows in the market. It is what I would describe as a bearish market. So it's not technically a bear market for the S&P, though it is for the Russell, but it's a bearish market. And in a bearish market, you're going to be generally, everything else held equal, better off being short than long. But Thursday was a huge day for the bulls to regain some control. And I likened it in the morning meeting today as being similar but different to our last kind of short, medium-term bottom that we had on January 24th. And the similarities are range, degree of extension, aspects of capitulation, really high volume kind of coming in. Higher volume was on this day. But what this day led to back here on January 24th was the bulls kind of regaining control for this period of time. And we know with gamma being negative, and we know with the ranges and the volatility being so big, it's very easy for this market to just overshoot, right? So normally you might think like, oh, this is it on the bounce, right? We bounce back to 444 and that's it, because it's where the ADMA is. But with the ranges of the volatility so large, you tend to see overshoots in both directions. And like we've discussed many times in the past here in the VTF, the biggest up days in the market tend to happen in bear markets. It's what our historical data shows us. So we got this huge rip here end of January into beginning of February that then kind of petered out a little bit. You know, there was a range being built here with this 444 as kind of some support, and 440 was really a big line in the sand for me that eventually we lost like a little over a week ago now, that led to this downtrend that broke the original January low. And then Thursday was that other big day. Thursday was the day when Russia kind of more officially invaded Ukraine. They'd kind of done it on the Monday, which was President's Day, but that was only into the more disputed territories. And then, Thursday last week was when the war kind of really kicked off into a larger scale, and they're trying to capture Kiev and everything else. And that's when the market gapped down huge. Honestly, gave us a gift. We came in, we were aggressive buyers, and it worked out really well for us. And again, it was just based off an understanding of degrees of extension and statistics. we went over this plenty of times. These types of war situations tend to be by the dip opportunities. Well, there was your dip, there was your extension, there was day 6 down or whatever, and we came in and aggressively bought. And same thing here. This bull market rally turning into 2 days is no surprise at all. No surprise at all to see kind of an overthrow to the upside. But as we get back into the moving averages, basically by Friday's close, this is when things become more difficult. Because now we have snapped back to the equilibrium area. We're approaching resistance. Friday morning, in Friday's morning meeting, I was saying I'm interested in starting to short the market, but only if the SPYs are in upper 330s to 440. So it was near the high on Friday. David M. in the VTF gave some good information where I think I came in and shorted around, just after 150 here, kind of after this high came back in. And that held for most of the day, but then the market closed so strong that I didn't keep the short position that I had. Because the market closed so strong. But that was kind of the area where I became more interested. And this 440 is still huge for the market. Bulls did a good job today because it was looking like we might get like shooting star dojis today, especially for the Qs and the IWM, and SPYs were going to be like more of an inside candle, but also with a bit of a topping tail. Because you can see here, we had our common gap to the downside, some support held, this low, these like kind of equal lows here, and then we got above the ADMA, time of day, right? 5-minute charts tend to break as we approach 10:30. So no surprise today that at 10:25 is when we clear this ADMA, but that could just be a 15-minute correction, and a 15-minute correction would basically just bring you back to highs. You can see that here. Like if we just had a 15-minute correction, it just would have brought us kind of back to highs. But instead, we overshot that. And then we overshot my expectations when all 3 of our indices actually turned green. Again, SPYs by the least amount, Qs and IWM perform better. We can look at them in a little bit as well. So this uptick right here that happened just for a little bit at 11:30 kind of got rid of my inside day potential that I was looking for today. And then we rolled over hard there. At this point here at 12:50, I thought we were going to retest lows. And I remember, I think I said even in the VTF at this time, pretty early on, like, oh man, if we close here, it's going to be a pretty crummy looking daily candle. And then lo and behold, we rallied. And I was like, okay, maybe we won't have a crummy daily candle. And then no new high came in, and then we got weak, and then we broke new lows again, and then it looked like we were almost making a bearish consolidation below the low of the day. And I was like, okay, it looks like we're going to have a bad candle again. But that didn't give any follow-through. That broke to the upside. Still, though, potential really bad daily candle. And then all of a sudden, these last 20 minutes, this rally was just ridiculous into the close. And that leads us with a pretty good close here. And it's kind of a rest day where bulls closed in control. So the question is, can they go after? Can they recapture 440? For me, if the SPYs can give us a close above 440, that's when this market will go from being bearish back to more neutral, which neutral is going to make this definitely more of a two-way market as opposed to right now where it's been a two-way market for sure, understanding degrees of extension, but for the most part it's been a bearish market where bears have been in control and you've been better off kind of leaning to the short side here for these last couple of weeks. If we recapture 440, that'll change. Let's take a look at the Qs and the IWM because they were stronger today. SPYs actually closed negative. I don't think I did my usual percentage look that I like to do. Right now, SPYs are down 0.25%, Qs are up 0.25%, and IWM's up 0.5%. So Qs, a little more strength here from the NASDAQ, but didn't really recapture any levels either. 350 is the spot on a closing basis for me, where if we can get above 350 on a closing basis, the Qs will go from bearish back to neutral. And the IWM has been best in breed here for really all of February. It's what initially led us down, going back to its peak here in November, which was caused by a false breakout. We had this false breakout of resistance here in November. That totally failed. From a failed move comes a fast move, and markets were really weak here. IWM let us lower. Oops, I just moved my moving average. There we go. IWM really let us lower until the January low here is when the IWM actually started showing a lot more relative strength, and the Qs actually became a lot weaker. You can see the degree to which the Qs overshot the January low and even did it on a closing basis, whereas the IWM barely ticked below, if it even did tick below 188.09. 187, yeah, ticked below by 16 cents, so like nothing. That's actually perfect. It's just enough to shake people out. And by shaking people out, it actually makes it easier for the market to go up. I did mention on Thursday after the close that for the SPYs in the IWM at least, there is still a double bottom potential. I'm not calling that as a matter of fact. I think it's too early to call that. But if the market can break the upper portion of the M here, because this never closed below this low, it just traded below it, so it lets the market shake people out further. There is still a double bottom potential here for the SPYs. There's a double bottom potential here for the IWM as well. Qs, technically not really, because of the Wednesday close kind of being so weak, and again, that's your relative weakness there for the Qs. But the IWM actually looks realistic. Like the SPYs don't look like double bottom is that realistic. It's still kind of far away. It's a little bit sloppy. But this is a potential double bottom in the IWM is very real here if the IWM can give a close above 207. 207 is $4 away. The ranges that the market's been having, that could be tomorrow. So interesting to see just how well the bulls held in today, how well they kind of maintained control. As far as stocks go, bunch of good stuff out there today. It was an interesting day, despite the fact that the market was weakish. It really felt like the things that we focused on were incredibly strong. Gotta start by talking about XLE. XLE gave a close above 70 today. That's fantastically bullish. It's been building out this bull pattern for a while. Early February was very overbought as an ETF, as a sector. Spent the entire month basically cooling down here and creating this $70 resistance level of a bull flag. Then we had two serious failures here off $70. As you remember, this day, pre-market, what day is that? That was Thursday, so that's the day that the market made lows. Pre-market, the XLE was also up to 70. So you almost got these two kind of massive bearish engulfing type candles that kind of came in on the XLE, but they never actually totally caused the pattern to really fully fail, at least not on a closing basis. And then today was able to get above 70 bucks with just all the latest headlines out of oil. And some of these oil names are all over the place, and one of the things we were trying to do this morning was really figure out what has Russia exposure and what doesn't. And we want to be focusing on more of those good old American energy pure plays and not really the diversified kind of conglomerate energy companies as much that may have Russian exposure. And even though ExxonMobil actually held up okay today, Exxon's got Russia exposure, didn't want to go there. BP, we all saw the headlines. Actually, as far as I'm concerned, this BP here performed really well, only down 4.9%, considering that they're taking a $25 billion potential impairment, but just giving up their stake in Rosneft or whatever the name of that company is. But then I saw some other headline come through that they might look to sell it or something. So maybe there's an adjustment of the information there that I have that I need to learn. So XLE gave this close above 70 bucks, and then the ones that we've been focusing on were just fire. Oxy, the trade of the day today. Talked about 40 and 41 as the key Oxy levels. I mean, this thing just a monster, closing up 13%. Huge opportunity to get involved here on this kind of bull flag type pattern. The ignition bar through 40 was a lot of risk, though the volume was great. If you were kind of buying it there, you had to risk about $1 on it. But if you missed that, inside bar, a little tricky because that breaks up and then, breaks the low of this. But the ADMA hadn't caught up to the low of the inside bar yet. So we know that shakeouts are much more probable. But this really just becomes kind of a perfect bull flag here. As soon as the ADMA catches up to the base is when you get continuation on it. So if you missed the actual purchase here on this break, you could have bought within the flag versus this bar's low versus the low of the bull flag. And that trade was just absolutely phenomenal for people who got in it. Just really, really incredible. Apache's been a much bigger focus for me. I got to give myself a pat on the back because I stuck with this Apache through this volatility over the course of this month, and I really crushed this name. finally today it really cleared up some. Well, I guess on Friday it cleared above $33, and then today it just gave follow through. Just incredible relative strength. Apache up 5% today. So that one was also really, really good. Unfortunately, I don't have rig. I got shaken out of that rig though a couple days ago when it kind of broke these lows. These tails shook me out, and this one's looking a little bit better if it can start getting to close above 350. But yeah, oil was huge. I'm trying to remember what else. I feel like my brain's not working. There were so many things this morning that we were looking at, and some of them were a little bit tricky. Let me check my spreadsheet. Some of them were a little bit tricky, but a lot of them ended up working out really well for us. Yeah, my personal list was kind of small today. Oh, SunPower. SunPower was a big one that I was looking at and was involved in, and I'm swinging it. Why is it giving me a weird tail as a candle right now? It's just a bad print. Just a bad print. I think closed at about $18, so closed it almost at highs. 1750 was a daily breakout. I was a little bit concerned about the degree of extension when I was buying it this morning. I started with a feeler around 17.25. I got filled on the bid on this first bar here, and I was going to give it initially some more space to kind of a pre-market low I think I was using. I think it was like 1675 or so. I'm not going to even check. Originally I was giving it to about 1675 or so. Felipe, who was in with me, said he was giving it to $17. I really wanted to use the low as my out, but I needed the ADMA to catch up. So the ADMA caught up at 940, let me kind of raise my stop. This pullback was a little bit more than I would like, but that's when the market was acting a little bit weak, but not that bad, right? ADMA caught up, creates a higher low, no higher high, builds out a wedge here. So you got higher lows and lower highs. Wedge breaks up, and then it was able to act pretty strong despite the strength. So it seemed like almost anything that's energy related at all in all different types of ways was performing today. It seemed like the electric car companies were doing well. It seemed like the solar energy companies were doing well. It also seemed like the traditional oil and gas companies were doing well, and that's because they were. And it's interesting. It's just an interesting dynamic right now because I remember, I think it was back in 2014, last time oil prices were around these prices, that really kind of helped to, what was this thing in 2014? Yeah, you can see this run here. I remember this, that SunPower had and all these other names had, back into 2014, last time we saw oil prices kind of at these levels, before then also falling back down and doing nothing for a long period of time here, and then going parabolic along with all the other speculative names in 2021. So I think you can almost ignore this bubble move here for a lot of these names. But I remember in some ways, it was the rise of oil prices in like that 2014 period that really kind of set off electric cars. I listened to a podcast over the weekend that was talking about statistics a little bit, which I always love to hear that stuff, that said that now 9% of U.S. cars sold, or cars sold in the United States, are electric. If you go back to 2010, that was zero, right? 0 to 9% over the 10-year period or so, 12-year period, is kind of a lot. And I just remember this really kind of waking up here in like that 2014 period, the last time the price of oil was high, because people start to eventually look for alternatives if the price of oil goes up too much. And we definitely have a supply and demand issue, which is also what is making these energy names move as well as they are. But these are totally different businesses, obviously. These solar power companies and electric car companies are speculative growth names for the most part that don't really make real money because they're trying to be in that growth phase, as opposed to the energy names or your real kind of value plays that also have the potential to take advantage of this supply and demand situation that we find ourselves in with energy. So I was thinking that over the weekend, and then it's interesting to see that solar energy companies and Tesla was really a market leader today. Tesla up 7.25%, really good relative strength there. And even the Chinese companies were super weak today overall, but not the Chinese electric vehicle companies. So what was Alibaba down 2.6% on the day, but you still were able to have NIO have a really strong performance of a day, up 8.7%. You have XPEV also given a really big move today, 3.7%. So just interesting, interesting adjustments here to the market as we're seeing the price of oil really start to move up. Yeah, so that was on the list. I know people had CRWD on the list. That gave great follow-through. This OVV was talked about in the morning meeting today as a potential breakout. I think I kind of poo-pooed that one a little bit, but hopefully some of you guys took it anyway because it turned into being a monster trade for us. So yeah, interesting. And it was interesting that growth was strong early and then failed. And I almost kind of just go to ARK as like the ETF of growth. And you know, I listened to another podcast over the weekend with Kathy, and man, I just got such mixed feelings about her. Like part of me respects the heck out of her, and part of me is just like, oh, she's such a disaster, and she's so all over the place in certain things. But the things that I do respect about her is her transparency. She just kind of tells it as she feels it, you know. She's very transparent. You see what she buys and sells every day. You might not agree with the approach or anything like that, but I definitely have respect for anybody who's able to actually be that transparent with what they're doing and what their agenda is and what their goal is. Because take it from me, who has to show his positions as they come and has to own the things that he does right and wrong. It's not easy. Yep, she has to be 100%. That's a requirement by being an ETF, and she gets benefits of being an ETF also. But there's downsides to it also. Cool. I think that is all I got. So with that said, just a reminder, I'm out tomorrow, so you guys are in luck. You'll have Patrick tomorrow to lead you to victory. I'm going to be snowmobiling through Yellowstone. Kind of excited for it. I won't even be around in the morning like I usually am. Again, happy to answer any questions. So let's scroll up into the VTF. What's Zoom doing? Down a couple bucks from where it closed. In other words, not a whole lot. GDRX getting smoked. Ouch. Getting smoked on our... Oh, we have Lucid. Lucid came out. I didn't realize that. This Lucid was another strong one intraday here. Trading down on the report a little bit. Q4 sales miss by 10 million. Oh, we have 3D triple D is out. Is this thing beasting? That's interesting. Where's my buddy Will? I know he's into these 3D guys. All right, first question I'm seeing here is from Jerry. Going back to Thursday's opening trade, day 5 with a big gap down, would you classify it as an A-type trade even though it's counter trend? So I want to say yes to that. The only difficulty, I think, a little bit was the execution of it, because we had a couple different ways in which Thursday morning could have worked out. It could have worked out exactly the way it did, and then there was a high probability that it would, and it did. There was also a decently high probability that we could see panic selling off the open that could lead to a hammer and then a rally. And then the third, which I thought was the lowest probability scenario that I presented, was that we would kind of be weak and see real selling because of Russia for like the first half of the day, and then catch like a midday bottom or afternoon bottom and then rally really hard for the remainder of that day and the next day. But there was every scenario that I laid out for Thursday morning was up. It was just kind of a matter of how up was going to happen. And the fact that they bought it up the second the market opened doesn't surprise me at all. So you definitely had to be quick. And yeah, it is counter trend for sure. So counter trend inherently means that it's going to be reward limiting as far as I'm concerned. But think about what reward limiting means in this scenario, right? Because just a snapback to equilibrium is the move of Thursday, Friday. And that's a huge move, right? So for the most part, I don't love the counter trend trades as much, again, because they're reward limiting. You pretty quickly you find yourself back in an equilibrium zone. And that's the end of what you can really expect for reward. Maybe it becomes reversal, but we don't want to predict that, right? Because it's always going to be much lower probability. But the degree of extension made that reward limiting reward still a tremendous amount, right? You know, SPY's going from 410 or whatever to yesterday's high of 438. We're talking about a $28 move just to get back to equilibrium. And again, it's just for one stock after the next. Apple happened to be a big focus of mine, and this one actually turned out to be a relatively weak one, which you spoke about Thursday afternoon. But this Apple move is 152 to 165 over 2 days here, and we were calling out that buy through 152.50 at the open that morning. Someone on the team here very rightly called out the pre-market relative strength that they noticed in Microsoft, which was such a great call. I think that was from Eddie. 270, 150 to a move of yesterday's high, just snapping back to equilibrium of 298. I mean, these are that's a $27 move. Like these are just huge moves. So the risk reward aspect of it was definitely there as far as an A+ type trade, in a major way actually. Probability of success going, happening right in the beginning of the day, volume confirmation, degree of extension. I would say was a layer of probability on this trade. Broadly, there was news involved, right, with Russia actually invading Ukraine, and we kind of had a better understanding of what that actually meant as far as sell the rumor, buy the news type of scenario here. So in a lot of ways, I do kind of consider that to be an A+ type counter trend trade. And that doesn't happen very often. These types of downside capitulation moves here that lead to these massive rallies, even though we've seen that happen twice this year, that tends to be like a once a year type of trade that where it's really set up like that, maybe even less than that, once a year and a half over the course of my trading career. And there's several that really stand out to me from my own trading career here, and I can point some of them out. Honestly, we had both of these two situations here. We had the absolute low here from COVID. I remember distinctly, and you can't really see it as much in the SPYs, but if you look at like Apple, Alibaba, a bunch of other candles here on the absolute low, they close as, how do I do the zoom thing again? They close as like perfect hammers, to the point where I remember doing something that I rarely kind of do that day, which is I was buying Stockman in the close. Yeah, look at the hammer there in Apple. A whole bunch of these closed with these like perfect hammers. Granted, the volume capitulated in the candle before it. I was buying into the close that day for swing positions. So you kind of had the capitulation event from COVID. I remember this one I didn't really capture as well, to be honest. The Christmas Eve bottom from 2018. Because I was skiing that day. That's when the Fed kind of made a big old pivot there. We can zoom in on that one. But there's a few others that I remember really well also. Yeah, this one I didn't really capture in the same way. Bad day to go skiing when it's the absolute bottom for the market, I guess. I remember the August 2015 one extremely clearly, August 24th. That was a huge opportunity to be able to buy. Where's that double bottom? Oh, here it was. This double bottom in 2016. That was another one. That was like one of those obvious kind of opportunities to really be able to come in and get some stock. So anyway, the point is, I'm just trying to figure out the frequency in which these like kind of A+ counter trend trades really come together, where you have that massive capitulation bottom and the risk reward of even getting back to kind of equilibrium is as huge as it was, that can create that high degree of a trade. It's very infrequent. It's very infrequent. But it's an A+ trade. It doesn't have to be that frequent. This could be a move, just to, again, as a case in point, buying Apple with the 50 cents risk, as we called it out, to be able to get in 2 days $13 worth of upside, and this was just one stock out of almost any that you could have chosen. That risk reward is the type of risk reward that can make your month, make your quarter, make your year off of this move. And especially now we're in a more difficult spot here, but I hope that people are still swinging stock on the team here from the Thursday low. I know I am. Because even though it's a more difficult spot here, you're just so much in the money on it that why wouldn't you have 15% of your position left as a runner here, 20% of your position as a runner, just to see. Again, I'm not coming in predicting it, but there is a potential double bottom here, just in case this retracement higher does in fact actually become a reversal. Though again, it becomes more difficult as we move higher here. So, Jerry, I hope that helps. From Terry Jones, good day. Derrick, can you give me your insight on TSM looking bearish? So I don't like to trade TSM a whole ton, even though I like the company, just because it's an ADR, but I've never felt like I've had a good grasp on it, and I've always felt like the daily chart, whenever I look at it, is kind of sloppy and range bound. And if anything, actually, this thing's almost broken this massive range to the downside. This 107.50 is huge support, and you haven't really gotten a close below it. I guess maybe today was the first time, but it's very extended to the downside with that close. So I don't really know what's going on with this. It seemed like overall semis were decently strong today. Yeah, AMD, which I'm in, closed really well. NVIDIA, which has had some problems recently with like that hack or whatever, was okay. Micron, maybe a little bit more sloppy, but overall it's been a good-looking daily chart. AMAT, maybe a little bit more sloppy too. So TSM here, very relatively weak. I don't exactly know what's going on with this one because I don't follow it extremely closely. I'm assuming it has something to do with Taiwan tensions right now that are related to Russia and the Ukraine. I think I saw an announcement that TSM today said that they were discontinuing their chip sales to Russia, but everyone else is doing that too. I don't know if that's a big blow to their business or not, because I don't know the business well enough. But technically here, this close below 107.50 isn't great. You don't want this thing closing below that major support level. But thank you.
Oh, mine, yeah.
You sure are.
Sorry. Enjoy.
I will. That was my dad. He's visiting me in Idaho. I'm going snowmobiling with him into Yellowstone tomorrow. And he gave me the famous Huckleberry milkshake here. If you ever find yourself in Victor, Idaho, the Huckleberry milkshake is super famous. So, yeah, really good stuff. Anyway, this TSM here, was I talking about it? Oh yeah, the close here below 107.50, definitely no good, but it's really extended to the downside. So we'll see how that plays out. Cool. Felipe, bro, Felipe, what a week for you to go on vacation, my man. I am very confident that if you were here on Thursday last week, it would have been the best day of your career. That is an expensive vacation. But I get it. We can't control the timing of that so well sometimes. From Justin, next question I'm seeing here. Could you please speak on what you think the impact of the end of COVID in the U.S. is on markets? I touched on it earlier, but thought maybe it's a better topic for the meeting. Sure. So, I mean, it's just really confirmation of the reopening, right? With it, we were all kind of looking at and expecting, I think, to come into play. So what it does mean, which we already know is I think that most of the effects of kind of COVID disappearing, the end of COVID, if you will, kind of in the United States, or us really returning to normalcy, and you even see it in like New York City, which has been one of the most hardcore places about COVID that there is, that they're starting to end their vaccine mandates, are starting to end their mask restrictions, things like that. But I think that a lot of that's already priced into the market, right? The reason why the Fed is tightening is because of that, right? That's why obviously it's because of inflation, but inflation is a result of the stimulus, but it's also a result of the reopening, right? Inflation is in a large way is a result of the supply chain issues, which are a result of reopening, which is a result of strong demand also. So I think that a lot of that's kind of already priced in. It's exciting that maybe as a world we're going kind of back to normal. Though that's right as there's all this chatter about World War III and everything else. The real question is going to be, at what point does supply and demand kind of equal out a little bit here for consumers? Because demand has been so strong while supply has been so weak. So what are people doing? What are companies doing? They're probably trying to make stuff as fast as they can to satisfy demand. There's a chance that they overshoot that in the other way. You know, maybe we end up having so much supply just as the demand runs out that we have the other situation that happens. And that is the argument almost for the economic slowdown, right, as interest rates are going up. So we'll see. It's definitely an interesting dynamic. We want to see how things can kind of balance out, and we want to see if this is when you hear chatter about the Fed, if they can kind of manufacture a soft landing on inflation, right? As we kind of balance out inflation, we balance out supply and demand, interest rates move higher, which, guys, interest rates should be higher. Interest rates are not supposed to be at zero forever. It's not normal. It's not how it's supposed to be. And we want that, by the way. We might not always want it for our trading portfolio, but big picture, and this is what I was saying back in 2013. 2013, interest rates are at zero. I'm like, we got to start hiking, because the next time we get a crisis, we're not going to have as many bullets. And that's pretty much what happened when COVID hit, right? We couldn't really lower interest rates because they were pretty close to zero already. So it forced us to have other means of stimulating the economy, such as increasing the Fed's balance sheet, which kind of gets us into the situation that we're in right now. So, just from an economics perspective, you want interest rates to be a little bit higher because it gives us some bullets for the next time that there's a major situation and we need to actually provide stimulus. But that's the entire, conversation. It's the entire cause of everything right now, and a lot of that is definitely still kind of to be determined on how this plays out. From Brandon, what percent of days this year do you feel have been hands-off versus putting risk on? I think that mostly it's been hands-off this year in a lot of ways, Brandon. I don't know about percentages, but and this is just kind of based on feel, I don't have any stats to back it up. I feel like there's been a lot of days this year where we were in tricky spots and gapping tricky, and I felt like we need to be nimble and focusing on names that are kind of in play. And then there's been a lesser amount. I mean, it tends to kind of always be that way, I guess, where days where you want to be aggressive are going to be less often than days where you want to be passive. But in some ways, it seems like it's been a particular lot this year where we need to try to be focusing on names in play. And again, I don't have any data to back that up, Brandon, but I'm assuming based on the question that you feel the same way that I do. I'm going through this, and I think that over trading is much more detrimental than I realize, and in a downtrending market, it is much more obvious. Yeah, I mean, it depends a little bit on your approach, but especially, if you tend to be long biased, the degree of forgiveness that the market provides. You can get away with over trading a little bit. You can get away with being a little bit too loose on your decisions when you have an easier market environment. But when you come into a more difficult market environment, like we honestly have had even before 2022 started, for several months now, the market is just not as forgiving on your mistakes, not even close. So, and that's when you'll really notice it in your numbers. So it's a great opportunity just to clean your trading up a little bit, Yeah, 100%, Brandon. I think it started last summer is when things got a lot more difficult. But we can't control the market environment. We can just control how we react in regards to it. And this is why it's difficult for new traders who have started now, because you didn't get to learn in an environment that was forgiving for your mistakes. This market environment, I can tell you for sure, is not forgiving on your mistakes. It is not like, in 2020, second half of 2020, where if you accidentally forgot your stop loss and went for a walk and should have gotten smoked, you came back and you're in the money anyway, or whatever mistakes you were making from a risk perspective or an execution perspective or over trading or whatever it was, the market would bail you out a lot. Market's not bailing anybody out anymore. So you got to be good to make money in this environment. But the degree of volatility when the setup is really there, if you can execute on it properly, there's also a lot of money to be made from the way this market's been moving. From Robert, I had to look at YouTube as the VTF doesn't have camera on. Now you want to get some McDonald's? This is so much better than anything McDonald's makes. World famous Huckleberry milkshake. Yeah, tough, Gabriel. Show up saying it's been a great learning experience. Aaron saying no pain, no gain. All right, guys, it's almost 5 o'clock. I'm out tomorrow. I'm going to enjoy my milkshake. I hope everybody had a good day today. It was a little bit of a sloppy day, but there was opportunity. We were really focused on the right stuff once again. So really good opportunities with relative strength and relative weakness. Oh, Larry's sneaking in a question. He wants to know about basic materials. Oh, man, what's the ETF again for... What's the materials ETF? I'm totally blanking on it right now. Graphite and lithium. So I don't know anything about graphite, to be honest. Lithium is probably... I don't know how much lithium is counted in the materials ETF that no one is reminding me what the symbol is of. This LTHM, though, 24 is a big level. XLB. Thank you. Yeah, XLB inside day-to-day. XLB kind of did what I wanted the market to do. See if it can recapture 86. I don't really know what the components are of XLB, though. I don't know the degree to which graphite or lithium stocks are actually in it. The material names I've had a big interest in are CLF, which gave a phenomenal trade on Friday when the bull option flow was heading through 20. FCX I like to pay attention to, and FCX has had a phenomenal 3 days. It looks extremely bullish also. Alcoa, which failed at an $80 breakout today, but it's also been a really strong one. Some of these steel names, X performing really well, STLD performing really well. Those are the material names where I've really wanted to be focused recently. Production on rare earths. I used to trade this, and I realized I wasn't moving my chart here. I used to trade this ALB a lot, which is a lithium play, but I haven't traded it in a while. I don't like that it lost this $200. I don't know. Honestly, the lithium plays here that I'm typing up don't look great, technically. This LTHM is waking up a little bit, but it's got to get above 25. ALB is one that I've traded in the past. It's got to get above $200. Whereas, I mean, I would much rather be involved in like this CLF chart like I was bringing up, or this FCX chart like I was bringing up, or this US Steel chart like I was bringing up. That's been kind of good money, and it's been part of the rotation, the value as well. So, hope that helps, Larry, and I'm going to sign off. Have a great night, everybody.